bought Bitcoin ETFs. The question came in, hey, we know you're not offering one. Have you changed your mind? What would it take for you to change your mind? We don't plan to, and we're not going to change our minds around this unless the asset class changes. Yep. Why? First of all, we don't believe it belongs. Like a Bitcoin ETF belongs in a long-term portfolio. Someone's saving for their retirement. It's a speculative asset.
That's exactly it.
And the funds that we offer invest in asset classes that actually have underlying cash flow. So like we mentioned stocks, you're buying the forward earnings of a company.
That's right.
And that bond, right,
has coupon and principal payments.
Yeah, you're going to pay me back and you're going to pay me something for lending you the money.
Exactly.
Right. So they both can be valued. And that's for us, we understand why they would rise up in a portfolio and the role they will play, and we can model them. Something like Bitcoin is just too volatile, and it's not a store of value. It hasn't been. And it's very volatile. When stocks got hammered in recent crises, that Bitcoin went right with them. And so it is speculative, really tough to think about how it belongs in a long-term portfolio.
So yes, you heard that right in the intro of the video. Vanguard, Bitcoin isn't store of value. We will never offer ETFs. That was just simply last year, ladies and gentlemen. He went on and proclaimed that with vigor. Now, as of today, this just announced, super breaking, Vanguard 2025 Bitcoin trading starts tomorrow. This is a massive, massive deal. Eleanor Tourette posting a great article here as well. Vanguard eyes crypto ETF access to brokerage clients. The $10 trillion mutual fund giant has stayed on the sidelines of crypto until now. This actually reports directly from Bloomberg, which is a massive financial reporting agency. Vanguard Group will roll out crypto ETFs access to its brokerage clients starting tomorrow. Now, you may have heard the old saying, Sailor is buying, companies are buying, retailers, everyone's buying. Well, take a look at this. We found who is selling. Great job from Wimar X on X. The exact reason why the market just crashed. Well, Wintermute, these are market makers, dumped 9,315 Bitcoin. That's $844 million worth. Coinbase dumped 8,375, $789 million worth. BitMEX dumped 7,993, $740 million. Binance dumped 5,460. Bitwise dumped 5,001. Bitfinex dumped 3,751 Bitcoin. This was a coordinated dump. When you combine that all, that happened in the last 24 hours. That's why we've continued to see massive, massive sell pressure. So it's interesting that all of the market makers are dumping at the same exact time. Like, who are they actually setting the price lower for? Is it for the Vanguard clients that finally will have access to purchasing the ETFs tomorrow? Some XRP breaking news. Japan confirms Ripple is building a zero-knowledge ID system on XRPL, and it could power the tokenized Japanese economy. A top Japanese source says upper management has directly confirmed Ripple is developing zero-knowledge identity verification system on XRP Ledger. This tech will position XRPL as the core infrastructure for Japan's upcoming tokenized economy, identity compliance, and asset rails. And other massive world fundamental news that you need to know about: Japan's 10-year government bond yield surges up to 1.84, its highest level since April of 2008. This chart is concerning to say the least. Now, as you all have probably heard about the Japanese carry trade, where people were borrowing money in Japan at 0% interest rates and then buying a bunch of assets here in the United States. Well, unfortunately, no one can borrow at 1% anymore. So let's take a look at this post here from Shakana Anslem Pereira. For 3 decades, the Japanese was the anchor. Zero rates, infinite liquidity, the foundation upon which global carry trades were built. Trillions borrowed in yen, deployed in U.S. treasuries, European bonds, emerging market debt, risk assets everywhere. That anchor is now breaking. The Bank of Japan held rates negative for a while, even while every other central banks tightened up. They defended yield curve control while inflation returned. They printed while others drained. Unfortunately, they can't hold that line anymore, ladies and gentlemen. Japanese institutions hold approximately $1.1 trillion in United States Treasury secretaries, the largest foreign position out there. When domestic yields rise from nothing to nearly 2%, the math changes. Capital that flowed outward for decades faces pressure to repatriate back to Japan. This happens precisely as the Federal Reserve terminates quantitative tightening, which happened today. So as the US Treasury requires record issuance to finance $1.8 trillion deficits, precisely as its interest on American debt exceeds $1 trillion annually. When the world's creditor nations stop funding the world's debtor nations at artificially suppressed rates, well, the entire post-2018 financial architecture must reprice. This is not a Japan story. This is a global story. The 30-year bond bull market ended. Most just haven't realized it yet. Kalshi is tapping Solana to tokenize betting contracts. The move could challenge other prediction platforms, providing Kalshi users with greater anonymity through tokenized buys and sells on the Solana blockchain. Kalshi has now moved closer to courting cryptocurrency users by offering tokenized contracts, which are now live on Solana. The move tokenized bets on predictions platform, which includes US elections, sports, and more, making them tradable on the blockchain. Kalshi posting on X, tokenized predictions powered by Kalshi are live on Solana. $2 million in builder grants are open. Axiom Exchange is next, and more chains coming soon. The tokenization move could challenge the market share of prediction platforms like Polymarket by giving Kalshi users more anonymity. DeFi protocols Jupiter and DFlow will reportedly bridge the company's off-chain order books to Solana's liquidity. Now, what's interesting as far as timing goes, this comes literally 24 hours after Polymarket CEO Copeland is now a billionaire, at least on paper. The platform still hasn't turned a profit, but its valuation has reached $9 billion. So we can see Polymarket was actually being promoted on 60 Minutes, and literally the next day, Kalshi decides to launch its next big move. Kalshi also experienced a surge in activity in 2024 because of a court ruling that allowed betting platforms to offer contracts on political events leading up to significant U.S. election. A November funding round led by Sequoia Capital and Capital G reportedly raised an additional $1 billion for the predictions platform, which now has an estimated valuation of $11 billion. This move could put Kalshi on a similar playing field as Polymarket. As you notice, there's going to be a ton of copycats coming along, like other companies such as Robinhood have pushed into prediction market sector through the acquisition of an FTX-linked exchange and clearinghouse. Coinbase is also reportedly exploring the same move. So now you don't only get to bet on crypto going up or going down, or day trading it as you would call it. Now they're going to incorporate betting on everything or day trading on everything. But let's talk about some regulations. This is what everyone has really been waiting for. Once regulations hit, then prices can be stable. Republican leaders released a final staff report going over claims of debanking by federal regulators in some which have called Operation Choke Point 2.0. It has been established that under U.S. President Joe Biden, the administration used vague rules, excessive discretion, informal guidance, and aggressive enforcement actions to pressure banks away from serving digital asset clients. The report that came out concluded that measures were needed. Congress must enact digital asset market structure legislation known as the Clarity Act and other bills targeting the cryptocurrency industry. The report also said, overall, the Clarity Act heads off a future Operation Choke Point 3.0 by reversing the SEC's regulation by enforcement approach, enabling market participants to lawfully operate in the United States under clear rules of the road and making clear that banks may engage in digital asset ecosystem. Now, what's really interesting right now is that we have seen just recently, Jack Mallers has been debanked. After all of this has been going on, Chase Bank has decided not to allow Jack Mallers, who obviously world famous for his Bitcoin evangelism and his company Strike, trying to move Bitcoin into mainstream. The report also covers claims of debanking by regulators, FDIC, Fed, OCC, and SEC. According to that report, at least 30 entities and individuals engaging in digital asset-related activities were debanked in some fashion by U.S. regulators under the Biden administration. So these new rules and regulations that are trying to be passed are supposed to clear all this out. And since taking office in January, President Donald Trump administration has scaled back or removed regulation impacting the cryptocurrency industry through executive orders on debanking, and with his picks directing activities at the Federal Reserve, SDIC, OCC, and the SEC. So the current administration continues to fight to get clear regulations based on the crypto market so we can move into the digital age.